Hello, this is Right Side Trader. Today is January 17th, 2026, and this is my weekly market review where I'm reviewing the S&P 500, that's SPY, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right, let's resize this and maximize this quarterly chart and see what we see. We see green. We see a green doji forming at a top and all, but this is just the first month on these quarterly candles, so no big deal there. Just be careful, be careful, be careful, and all. All right, on this monthly chart, we can see that we are still above the 9-10 moving average, so that means we are still technically in a bull market. So everything is okay for us bullish traders. We're still trading below. Let me zoom in a little bit here. We are still trading below an R1, that's this green line here, and above pivot. So technically we are still kind of bullish, okay, and stuff. So let's go ahead and go down to our weekly chart. On our weekly chart, what I see here on our weekly chart, I see a doji forming. This last green candle here and all is inside this candle here. We're below our resistance 1, got banged down below a resistance 1 here on these monthly pivots and all, but we are still above our central pivot line. So again, we're still looking, we are bullish, but some selling pressure came in. We got to get a little indecision in the market at this time this past week. But this is the week before earnings, and it also was expiration Friday on Friday for the monthly expirations. That's still probably significant, pretty significant, because a lot of the big boys probably still play the monthlies also pretty heavily. But let's go ahead and go down to this daily chart and wrap this on up. On this daily chart, let me zoom in here right now. On this daily chart, I was thinking that we could possibly break 700 this past week. I saw that evening star at a top, and I was thinking, okay, this is going to be it. And then I didn't realize I wasn't trading on Friday, number one, and then I realized that it was expiration Friday. Expiration Friday is kind of highlighted with that dotted red line that we are looking at right here. I'm going to go ahead and dotted red line here. I always keep that on my chart because, again, monthly expiration. Now these days we have expiration every day, but this monthly expiration is still pretty significant, I think, because I still see the market trades a little bit different that day around that Friday expiration. So we didn't make all-time highs. We didn't break that 700 and all, and we ended up with lower lows and lower highs for those last 2 days of the week. But I'm still kind of okay with that. But look like we could be beginning to form a downward channel early stages, and we're getting close to pivot. Next week pivot, look like we still should open above this pivot line here and all based on where the market closed at. But we could gap down and end up below here. And if we end up below here, we would come down here to a support 1, but I'm kind of not expecting that with earnings coming up next week. So that's all I really want to say about that. Next week, earnings can be that catalyst that gets us coming up above pivot, opening above pivot, and getting to our R1 level. As you can see, last week we did not make R1. The question is, will we make R1 coming this week? And then if we can actually get to an R2 level and all, which is this yellow line, we will break 700. And with earnings may just be the event to cause us to get there. But we got to just wait and see what actually happens. And that's pretty much all I have. This is Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend. And I'll talk to you next week. Have a good one. Bye.